Yes, financial management and performance is all about financial discipline and control. We've said it here. Business owners should separate their personal and business finances to enable clear accountability. What does that mean? You want to pay for so and so, which are personal expenses. Transfer it out to your personal account, or after going through the normal processes that has been laid down for payments and all of that, with clear narration. If it's a director's allowance, if it's part of your salary, if it's an advance, treat it like that. Then from your own personal account, you can now start expending. Or is it that a customer paid directly into your personal account, and you now want to pay all suppliers and employees, you are now paying from your personal account? No, transfer that funds back to the business, showing that, these funds was received from so and so customer. Then now effect the payments for the business from the business account. Separate personal expenses from business expenses. Yes, budgeting too is also another means of control. You need to say, in so and so months, this is what we want to spend. This is what we are going to spend for so and so project. Before you start spending, there needs to be a budget to show that it has been thought through. There's proper planning. You can identify the resources that are needed, and there won't be challenges in the middle of the road. There needs to be budget, and then there needs to be checks on the budget performance. Then there needs to be reliable reporting. You must be able to report the resources that have been expended and the income that has come in, and then you must prepare financial. Yes, when these records are available, it will be easy to raise investments, whether from lenders or from providers of capital. Performance can be easily evaluated. Yes, this is Balanced Planning SME and Professionals Clinic. We are looking at corporate governance. Yes, value creation. Governance is all about value creation. Yes, about securing competitive advantage. It's about ethics, corporate social responsibilities, and practices that reduce risk of regulatory exposure and brings about valuable partnerships. Yes, those are the things that governance brings on board. When you have people from different diverse fields, people with different experience that can contribute in the discussions relating to the business and decision making. Yes, the pillars: sound reporting, compliance, operational efficiency. Yes, when all of these things are in place, it will be easy for the organization to partner with other organizations, to partner with bigger businesses, to have bigger suppliers, to have bigger customers, because all of these things would have, in decision making, in planning, in positioning of the business, proper diligence will have been done. Yes, so we are moving on. The next section now is internal audit on our first poster. Internal audit. What's internal audit all about? It's about checks to ensure effective risk management. So there are different types of audits: compliance audit to ensure adherence to tax laws, risk-based audit to identify and mitigate key risks, value for money audit to check economy efficiency and effectiveness, social and environmental audit to ensure that goals align with community and CSR goals. So how can we do all these things? A simple checklist can help in putting in place these measures. If we know that, we need to file our VAT returns before every 21st. We need to pay our employees tax deduction before the end of, or every on the 10th. We need to pay our employee salary before the end of the month, or immediately as the month ends. So we need to do this, put these measures in place, ensure the cash is available, prepare the payroll. We need to identify the risks. How much credit can we give our customers? How much goods can we stock? So these are some of the things that when the business owner might be overwhelmed if they have to be the only one that has to go through all this planning. So when you have committees, when you have members, experienced members, your employees, your senior employees, senior managers, as members of your board, you can the CEO can delegate some of these tasks to them. We know that in SMEs, most SMEs will be unitary boards. It might be too expensive for them to have double-tiered boards and a lot of non-executive directors and all the likes. But then you already know that, okay, this and this and this group of people, at every point in time, must have this and this group of people meeting on so and so matters. So that way, even as a small business, if anything happens to the owner of the business, or if there's any emergency or any decision that needs to be made promptly and the owner of the business is not around, there are people who already know the peculiarities of the business that can say, oh, this is what this person will have done, or this is the decision that we've taken in relation to this and that. So that it also helps resilience, because you cannot predict the environment or the occurrences that will happen, and a business that is able to respond promptly will have an advantage over a business that is delayed, that decision making is delayed. So, and then what internal audit does is to check all of this, how effective are they, all of these measures that we have put in place, identify the risk and put in place measures, controls to address the risk. Yes, we will upload our second poster on the Instagram page at My Balance Planner. This video and the other materials will be uploaded on our website. We have a community that we are building. On the website there is codex, there are tools, and we are building a network of professionals, business owners, and people that are interested. Join us.